We are seeing the Red Sea on the US stock market again. Against the background of this Red Sea, gold and even Bitcoin are pleasantly green. And the main reason is that the chairman of the US Federal Reserve, Jerome Powell, is being attacked by Trump. The US president is confident that the economy will not escape recession unless there is an immediate interest rate cut. However, Jerome Powell is in no hurry to lower this rate, as inflation expectations are breaking through the roof. And Jerome Powell himself says that the impact of tariffs on inflation will be much stronger than he thought. And the question is not even whether Trump will be able to fire Jerome Powell. The question is whether the US Federal Reserve will remain independent. After all, if the government has the right to decide both fiscal and monetary policy, then we risk being in a catastrophic situation where the government will plug all its failures with printed money and draw a beautiful picture for the electorate. And we know how the government likes to print money in order to inflate the stock market or the economy and throw dust in the eyes. It already smells like a new Turkey, in fact, where they liked to lower the key rate despite rising inflation. And that's what it leads to in Turkey. This bundle of Turkish lira costs 300 euros. But, for example, the exchange rate of the lira to the dollar is just some kind of waterfall. And that's why Bitcoin is growing so much against the lira in this country. That is why the level of acceptance of Bitcoin in countries such as Turkey or Argentina is twice as high as the level of acceptance in the United States and other developed economies. After all, for citizens of these countries, Bitcoin is not an investment, but a way to avoid hyperinflation of their native currency. And that's what will happen to Bitcoin against the US dollar if there is hyperinflation in America. In short, the termination of the independence of the US Federal Reserve may have bad consequences for short and medium terms. In terms of confidence in the existing financial system, dollar assets, and the dollar itself. And even talking about it is already forcing investors to sell America. This is evidenced by the fall of the dollar index and a record outflow of funds from American markets. And that's how today Bloomberg was led by the words "Sat America." Markets have finally figured out Trump's real deal. This is to sell America. At the same time, by the way, other markets even managed to grow, and the euro chart against the dollar already resembles gold. Pay attention to this graph here. I decided not to disassemble each currency separately, but simply take all the major currencies of the G20 countries. And what do we see? We see that they are now strengthening against the dollar, and very seriously. Meanwhile, in the 2018 year, when Donald Trump unleashed the first tariff war against the United States, we saw the opposite picture. The dollar strengthened against the 10 major currencies of the world. This is a big and very important difference that shows the degree of distrust in the existing financial system. And threats to fire Paulo only reduce this trust. The speed of the dollar's decline, combined with the continued decline in US stocks, is worrying. This latest fall feels different and is fueled by fears about the independence of the Federal Reserve System, on which the entire global financial system is based. That's why this crisis is different from the coronavirus one. Back then, investors saw a safe haven in US bonds, and therefore their yields were falling. This time, investors are fleeing from them, and therefore their profitability is growing. And this is a big problem, and it can force the US Federal Reserve to intervene and can greatly affect the confrontation between Trump and Jerome Powell, where the latter will bend under the former and still lower the interest rate and print a lot of money. They say that they are preparing $2 trillion of salvation. The situation with the tariff war also affects the dollar and dollar assets, of course. For example, Japanese negotiators complain that the main problem in trade negotiations with the White House has become constant changes in requirements from the United States. This is what prevents us from achieving concrete progress and concluding a real trade agreement. The lack of official progress in trade deals puts pressure on the dollar, causes bond yields to rise because foreign investors sell them, and leads to investors fleeing more reliable assets, such as gold and today, as we see Bitcoin. Perhaps investors have begun to see Bitcoin as a safe haven as gold. It would be nice, by the way, because before that they constantly viewed it as a technological action. However, it is strange that along with Bitcoin, such coins as Fartcoin are also growing. Therefore, the more important problem that needs to be understood is the problem that investors are fleeing from US Treasury bonds, not only to Bitcoin, but also to Fartcoin. Nevertheless, for Bitcoin, the fall of the dollar may be the trigger that will be a positive moment in the long run. Since due to the fact that the dollar will depreciate, Bitcoin will strengthen against the dollar. This is logical, and perhaps investors will still find a safe haven in it. They will see it as in gold, and not in technology. At least today, we saw a small hint of this. The trade war with China is also escalating because China stops importing energy resources, and the United States. In addition, he is looking for new trading partners from whom he will buy these energy resources. And besides, today he presented an ultimatum to the countries that will choose the US side in this trade war. And, by the way, India, for example, has already chosen the side of the United States. Chinese President Xi is actively traveling to the countries of Southeast Asia. He was in Vietnam, he was in Cambodia, he was in Malaysia. The Americans, in turn, in the person of the Vice President of the United States, are also on the way. Here he is, for example, in India. Now we are definitely in a global trade war, where the opposing sides are looking for allies. And even if some kind of trade deal is conditionally reached tomorrow, this war will not end. Both China and the US demand that the world choose a side. That's why China is buying gold on a record, and that's why Trump wrote "The one who has gold and sets the rules." It is thanks to this that gold for the first time in its history exceeded $3,500. That's a 20% increase in 2 months. And this is insane growth for an asset with a capitalization of $23 trillion. Imagine what will happen to Bitcoin when investors see new gold in it. And all this is happening against the background of the fact that the stock market has lost $1.5 trillion in a day, and is not getting close to making this April the worst for it since the Great Depression. So, now that we know what happened, let's look into it even deeper. Because the tariff war and the confrontation between Trump and the US Federal Reserve is not the only thing worth paying attention to this week. Let's discuss what will happen to Tesla's shares. Will it break through its support of $220? Why the movement of gold should scare you a little. Let's also talk about the reporting season, which begins today with Tesla. It is today that Tesla will tell about its earnings for the last quarter. And finally, let's talk about Bitcoin. Will he be able to repeat the movement of gold? Let's start with the volume of cola put options on gold. As you know, when we see such jumps as down here, they tell us about the euphoria in the gold market, and we need to pay attention to these moments. One of the best growth periods in the history of this precious metal is happening right now, and it scares me a little. As you know, I love gold, just like Bitcoin, which in my eyes is digital gold. When we mentioned gold, we said that it should be held in the same way as Bitcoin. But why am I concerned about the price of gold now? You can see that the past peaks of euphoria coincided with the periods after which the correction of the price of the gold metal followed. Here is another graph that hints at this. On this chart, we see the price of gold in relation to the S&P 500 from the top. And at the bottom we see the Che rates indicator. And as you know, when the rate change becomes as high as here, where indicated by the arrows, the price usually reaches local peaks. And although this does not necessarily mean that growth will stop right now, you should already be on your guard, in anticipation of the so-called explosive top of the blow in the top 4 gold, when central banks will already stop buying. And retail investors, on the contrary, will fly like hotcakes. These explosive peaks happen during euphoria on metals, stocks, cryptocurrencies, and so on. And as you can see from the latest data from Subu Trade, we have some concern about gold if we look at how high its price has risen. From the 200-day moving average, the distance of the price from this moving average is at peak values, as you can see here. And only in 14% of cases, after the price became 25% higher than the 200-day moving average. Gold continued to grow 2 days after that. This is not a lot of cases, I must say. But I want to focus on large time frames. Look at what happens 6 months, 9 months, and even a year after this indicator soars. The statistics for gold in this case are really not very positive, especially after 9 months. In all recent cases, look, except for this period of stagflation, the results were negative. So it's important to understand, if you think we're in a period of stagflation right now, then you might like gold even at current prices. As you can see, during the stagflation here, even with overbought, it managed to give an excellent 9-month yield. In the 72nd year, 45%, in the 73rd, 4%, in the 74th, almost 14%, in the 78th, 22%, and in the 79th 67%. But if stagflation doesn't happen, everything is absolutely red for gold, minus 22%, minus 12, minus 16. Why? Because what happens is what is called capital rotation. Investors see that inflation has not happened, that everything is fine with the economy, that inflation is under control. And they use their profits on gold to reinvest them in stocks, maybe in Bitcoin with cryptocurrencies. But now the gold market has really gone too far. And he has come this far literally several times since 1980. Gold goes beyond its standard deviations. What adds to the anxiety for the gold short term is this chart. Usually I don't attach too much importance to these transactions, but only if they are not as huge as this one, which we saw last time. This is the largest transaction in the history of the physical gold spot fund, and it occurred last week. And although the price has, of course, increased a little more since then, the question arises, was it someone who fixed profits? Or did someone just enter the market with such a huge transaction? This particular trader is inclined to believe that most likely someone wants to open a short position on gold. It's not that I'm going to stop being a bear for gold, but when I see such indicators, I remember that people who enter such periods end up in the red, and for a long time. In short, they turn into long-term holders. And about long-term holders. If you plan to hold gold for decades, then I think the best strategy would be to just buy once a month. After all, this is real hard money, not some kind of fiat currency. People buy gold because they don't believe in the fiat system. You also need to remember that gold is a liquidity hunter, so if at some point this year the liquidity runs out, gold will also suffer from this. But why is gold growing so much? Of course, thanks to the purchases of central banks for many reasons, as we have already talked about many times. For example, due to the attempts of many countries to create their own digital currencies, or the uncertainty around the dollar. Also, gold is already growing because of euphoria. Investors see it outperforming the stock market by a whopping 42.5% this year, which adds fuel to the fire. Look for yourself, investors are investing in gold funds like never before. This is a record net inflow of about $8 billion last week alone. In addition, we really see that rates are going down all over the world, which makes gold more attractive everywhere. The yield is 42.5%. What kind of bond can offer such a thing, especially that bond whose yield is also falling due to falling rates? For example, the European Central Bank lowered the rate again, and this, by the way, infuriated Donald Trump, who attacked the US Federal Reserve with renewed vigor so that Jerome Powell lowered the rate in America as well. According to Trump, there is no inflation in America anymore, everyone is already lowering rates in Europe. And it's time to lower rates in America as well. And if he wants to, he can fire Jerome Powell. Jerome Powell will leave if I ask him to. This is a quote from Trump. However, Jerome Powell does not agree with this. In addition to this, flows into the money markets are also going up. And all because everyone is concerned about the geopolitical situation. And what, as a rule, is the best hedge against geopolitical uncertainty? Of course it's gold. But is there another hedge, a new hedge? This question is now becoming more interesting, especially against the background of the fact that the stock market has lost $1.5 trillion and Bitcoin has grown by 3% against this background. For example, Larry Fink believes that Bitcoin can be such a hedge. He warns that the public debt problem could lead to Bitcoin displacing the dollar as a reserve currency. And his forecast for Bitcoin is $700,000 per coin. And it seems to me that the altcoin screener presented interesting comparisons. This is a graph of the ratio of gold to the S&P 500 from above and a graph of the Bitcoin price from below. And here you can find the most interesting patterns. Altcoin Screener found that since the 2011 year, during periods when gold begins to behave extremely aggressively and then goes into correction, Bitcoin often begins to catch up with it and show some of its best results, precisely at such moments when gold reaches its peak. And here are a few such examples. Here, gold peaked, went into correction, and Bitcoin went up. Here, gold peaked and went into correction, while Bitcoin went up, and so on. I also noticed when I looked at this data that this often happens in March or April. And that's pretty amazing, because what month are we in right now? We're in April. And many believe that the altcoin season begins in April. So now there is a lot of excitement and enthusiasm in the crypto world again, especially in Bitcoin. And here is a comparison of the price of gold from above and the price of Bitcoin from below in the 2016th, 20th and 25th years. Gold peaked here and went into correction. What happened to Bitcoin? He's grown up. Gold peaked and went into correction. What happened to Bitcoin? Also grew up. And now, if hypothetically, gold goes into correction, most likely, this will lead to the growth of Bitcoin. It seems that the pattern may well repeat itself if gold starts to fall. So, there really is some kind of synergy between Bitcoin and gold. It does not depend on gold now whether this growth will continue. And Bitcoin, by the way, is still in a bull market. This yellow line, which served as support in all bull markets earlier, has played back as support here again. We bounced off that line. However, this chart shows that all bear markets found their bottom on this line or slightly below it. For example, here, and here at the very least. Therefore, if we have a new bear market in the future, we should definitely return to this line at the bottom of the bear market. This is what I started using in the last bear market, and what allowed some traders to buy Bitcoin here, in the range of $16,000 to $30,000. In principle, this is all you need and a little more patience, because such moments occur approximately once every 4 years. So are the peaks. Therefore, if history repeats itself, one day the Bitcoin price will touch this line again. Now it is at around $45,000 to $46,000 again. In short, Bitcoin is now in a very specific period, which depends on whether gold has reached its peak, and whether investors will reinvest their profits in gold in Bitcoin. When will we see a steady and fairly long rotation of capital from gold to Bitcoin? Pay attention to this graph, it answers this question. Gold is on top, and consumer sentiment is on the bottom. And when consumers feel bad, they are not sure about the economy, personal finances, spending, work, business. Gold is growing, look. Consumer sentiment is falling, gold is growing. Consumer sentiment is falling, gold is growing. In short, when consumer confidence falls, gold rises. When consumer confidence returns, gold is sold. For example, gold is being sold here because consumer sentiment is growing. And now, if we look at all these charts, we will see that consumer sentiment is catastrophic. They have a negative attitude to the state economic policy. They expect business conditions to worsen over the next year. They believe that business conditions are unfavorable right now, and they expect inflation to be higher over the next 5 years. Naturally, against this background, gold grows by leaps and bounds. But when these charts start to unfold, you will see the sale of gold, and after the sale of gold, you will see the growth of Bitcoin. And by the way, I really like this post. If you also look at the colossal decline in consumer sentiment, business optimism, and the colossal scale of the falling markets, I think there is a second crisis. This is a crisis of trust and competence of this administration. Do you know what this hints at? This hints at the possibility of impeachment of Trump in the future. And perhaps this will also affect the growth of consumer sentiment towards the positive. So we need to look at this very carefully, too. Now let's take a look at the graph in the video against Cisco. This is a graph that I have already shared with you, but why do I want to show it again? Because it tells us what an important moment in the market is right now. He's very important. This moment happens literally several times in 10 years. H-video dropped a little yesterday again, as it quickly turns from a tech company into a pawn on the board of the US-China trade war. Just last week, the United States restricted the export of Nvidia H20 chips to China. And today, Nvidia shares have fallen by another 3%. As Huawei is already preparing an improved iChip for Chinese customers next month. Huawei wants to fill the hole that was formed after the Nvidia ban. And all this is happening against the background of the fact that Trump is calling on companies and countries to choose between China and the United States. And the CEO of Nvidia flew to Beijing to save the situation of his company. He stated that H-video has been working in China for 30 years and will be working in China for the next 30 years. Doesn't it look like this company just chose China? In any case, new Huawei chips and bans on video chip sales to China may shake the company's position and make this scenario real. The CEO of Nvidia will do everything to prevent this from happening. But what's interesting is that this moment, when the H-video is trading around $96, it happens in the Fibonacci gold pocket. Usually, it is from these levels that the trend reversal occurs, This happens in 60 to 70% of cases. But if now the price of Nvidia falls below this golden ratio, then Nvidia will continue to update the highs, and we will lose the market leader. After all, Nvidia is his locomotive, just as Pussy was in the 90s. Many already believe that we have lost it, that the shares of Nvidia will not turn around from this golden section, but will break through it and go down. But personally, I see a lot of signs of oversold. Recently, The Economist published 3 major articles that talk about the end of the era of the US dollar. The dollar hegemony is coming to an end, and gold is telling us about it. Which, by the way, I don't believe yet. I believe more that we are beginning the era of currency war, currency multipolarity, and the US dollar is not going anywhere yet. So don't expect it to collapse tomorrow. The maximum will weaken, just as it already did in the 2018 year. Look, this is President Trump's first term, his tariff war against China. What happened to the dollar? He was falling. And now he's falling too. For Bitcoin, a weakening dollar is a good catalyst in the long run. Pay attention, the dollar started to fall here, Bitcoin hung around a little bit, and then exploded. Therefore, a weakening dollar is good for Bitcoin. But the majority of people are bearish, which translates into a sell-off of dollar assets and American markets. And this provokes a lot of market signals. For example, this is the McClellan Summation Index, and it displays the difference between the number of rising stocks and falling stocks on the stock exchange, which helps to assess the overall strength or weakness of the market. And now, as you can see, it is below zero, which happens quite rarely. This means oversold and weak market. Traditionally, when investors bought at these levels, both on the Stack Index and on the S&P 500 Index, it was close to market lows, although at the moment it was very scary to buy. Now, why is it important to really look at all these facts and figures? In order for the market to become bullish, bulls are needed. And at the moment, it doesn't matter which sentiment report we look at, each of them is a bearish report. On this chart, the price of the S&P is 500 at the top. And the difference between the percentage of bulls and bears among investors is at the bottom. The higher this blue line, the more bulls the lower. The more bears there are. Now we see that it is much lower than it usually is and below zero. This means that there are more bears than bulls. And such moments, to which we are now, can be counted on the fingers. For example, this is where it was the last time, here, here and here. If we want a bull market, this chart has to overcome the 0% line, this line. It is usually called the alarm wall. If we overcome it, it means that there are more bulls than bears on the market. So far this has not happened. And of course, it's worth watching further. The reversal of this blue line, and its growth above 0%, will mean the return of bulls to the market. Now, where are we in terms of market cycles? But if you look at the standard growth cycles, the growth, for example, of the 60s, 80s, 90s, we are here, approximately at those levels, from which there is a rather tough correction. After that, the market returns with good growth and updates the highs. And we don't know yet if this will happen, but market cycles tell us about it. What is needed for this? This will require, at a minimum, the conclusion of many trade deals that Trump must conclude over the next 90 days. I really have no idea how he will do it in just 3 months, because historically, trade deals in the United States took an average of 18 months. For example, the deal between the US and China took 14 months. Now the US plans to conclude 135 deals within 90 days. Sounds like something impossible, mission impossible. Even 90 deals in 90 days seems unthinkable. But good luck if they do, it's just incredible. Summing up, we are now at a very key moment. In fact, the next 90 days will decide a lot. Recently we saw an interview from Goldman Registry Office, and it said that tariffs are never positive, and I would just like to quote it again on YouTube. This is very important for understanding the current moment of the cycle. What does it say here? It says here that the first thing is that tariffs initially increase inflation. Important. Initially. Second. As a result, at the end of the road, tariffs lead to deflation. Why? Because tariffs are taxes, and since tariffs are taxes, demand is declining. And a reduction in demand, a crisis in demand, precedes deflation, that is, a fall in inflation. Deflation always happens in a recession, which forces the Federal Reserve to step in, print money, cut rates, which leads to increased consumer confidence, asset growth, and so on. It's a wonderful scenario. Although the path to the final result is, of course, bloody and painful. And he will frighten many. And those who are not afraid of it will take off all the cream. Now, as for reporting. We have big earnings reports ahead of us. Tesla starts the reporting season, of course, on Tuesday. Then we will have Google, which, by the way, is also very important. And if you thought that these would not be volatile events, look at what the options market expects from this. They expect a move of 7 to 8% on Google and 11% on Tesla. These are huge numbers. So we are waiting for major movements and a very, very volatile week. And by the way, this Tesla earnings report will be different from the ones we received before. Why? Because investors are expecting him, along with a loud statement by Elon Musk, because he may leave the US government. Leave the government's spending efficiency department. Elon, top Tesla investors say, needs to focus on the brand crisis if he wants to not just stop the fall in Tesla shares, but also blow them up to $550. Tesla, they say, is still one of the two most innovative tech giants in the world. Tesla's sales are falling like a brick. Companies like BYD are already overtaking Tesla. For example, they sold 416,388 cars in China, while Tesla sold only 172,754 cars during the same period. And this is in China. And in Europe, you can see for yourself what is happening. Especially in Germany, and for some reason, in the northern countries of Europe. A drop in sales from -6.8 to -62.2%. In any case, the future seems optimistic for me personally. And those times that are compared to the Great Depression today, which call April the worst month since the Great Depression, will be a good opportunity for us. And I think that a few years later, many investors will also recognize this. But don't forget about it. Take a good look, and you'll understand what's going on here. As for bear markets, as you know, they quite often coincide with recessions or financial crises. And we reached a technical bear market just a couple of days ago. That's -20% from the top of the stock market. Note that only 3 of all designated bear markets have managed without a recession. The others were always accompanied by them. Only 3 without a recession out of all of these. And the recession is quite real. And we see a lot of signals that hint at this. For example, US imports from China have fallen by 64%. Global container shipments are being cancelled in record numbers. And production orders have fallen by 75 points since January. And this could also affect the recession in the United States. The dollar is weakening, but the Europeans are not benefiting from this because they simply do not travel to the United States anymore. Look at how tourism from different countries to the United States of America is falling. This, of course, will be displayed on flights, on hotels, and on the entire tourism sector. And so on and so on. And these are not forecasts. These are real-time data that show a global system that has been artificially crushed by trade wars. All of this is causing a record increase in economic uncertainty, but also a record increase in opportunities. See you in the new videos. See you soon.